Greetings, global financial market participants, and welcome to this comprehensive market overview as we step into a fresh trading week. Traders and investors around the world are once again laser-focused on the macroeconomic and geopolitical landscape, searching for the signals that will guide positioning and risk management decisions in the days ahead. The tone at this weekly open is one of cautious optimism tempered, of course, by a keen sensitivity to any market-moving developments that may have surfaced over the weekend. Starting with energy, crude oil is currently trading near $96.50, while Brent sits around $95.20. Prices have retraced from recent highs after geopolitical tensions in the Middle East eased, trimming the immediate supply risk premium. That said, the structural backdrop remains tight, so any renewed escalation could quickly propel prices back toward the $100 level. Conversely, if the situation stays calm, we may see oil consolidate or drift lower into the $90 to $92 zone as the week progresses. In precious metals, gold is holding firm near $4,750 per ounce, supported by persistent safe haven demand amid lingering uncertainty and expectations of future monetary policy easing. Should risk aversion re-emerge, gold could extend gains toward $4,850. On the flip side, a sustained risk-on environment might trigger profit-taking and a retracement toward $4,600. Turning to foreign exchange, sentiment is largely shaped by shifts in risk appetite and interest rate expectations. The Euro versus USD currency pair and NZD versus USD pair are modestly supported by a softer US dollar and improving global mood, with room to edge higher if risk-on conditions persist. USD/CHF, meanwhile, could face downside pressure as safe haven demand fades. On the other hand, the loonie remains closely tied to energy prices. Softer crude would support the pair, while any rebound in oil would bolster the Canadian dollar. USD/JPY continues to track U.S. Treasury yields. Sustained yield strength may push it toward recent highs, whereas a decline in yields could trigger a corrective pullback. Equity markets are entering the week with measured optimism. The US 500 and Nasdaq benefited from a relief rally last week, helped by easing oil prices and renewed hopes of Federal Reserve rate cuts. With a stable geopolitical backdrop, modest further gains remain possible. However, any resurgence of tensions would likely spark a swift shift to risk-off positioning and prompt equity retracements. In the digital asset space, Bitcoin is trading near $70,000 and Ethereum around $2,182. Both cryptocurrencies continue to mirror broader risk sentiment and global liquidity conditions. Continued risk-on flows could see Bitcoin challenge the $72,000 region, with Ethereum following suit toward $3,900. On the other hand, a stronger US dollar or renewed macroeconomic uncertainty may lead to consolidation or short-term corrective moves. In summary, the baseline scenario for the week ahead points to cautious stabilization across asset classes, range-bound energy prices, resilient gold, a slightly softer US dollar, and supportive conditions for equities and cryptocurrencies, unless there are sudden surprises from President Donald Trump. Markets remain highly headline-driven, so we must stay vigilant for any weekend developments that could rapidly alter sentiment. As you prepare for the sessions ahead, flexibility and disciplined risk management will be your most important tools. This week promises meaningful opportunities, and staying closely attuned to the evolving macro narrative will be key to navigating the global financial markets successfully. This is the Market Overview, brought to you by Sen Securities. Wishing you all a productive and profitable week ahead.